What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market, because that is simply impossible to do. Today, the market doesn't look like it's having a great day today, people. It's about to close in a couple of minutes. So I hope you guys are having a great day. But let's see what is being reported. It says the S&P 500, NASDAQ pulled back from records as Fed rate decision looms. I'm thinking there's a pullback because a lot of these big investors are expecting a rate cut. So they're taking gains off of the table, because normally when rates go down, people tend to invest more, spend more money. So that's what I'm thinking. It's just my opinion, right? They're taking money off of the table because they're expecting a lot of money to flow back into the market once rate cuts take place. But who knows? So let's see. It says U.S. stocks pulled back from records on Tuesday as the Federal Reserve kicked off its September policy meeting. The benchmark S&P 500 and the tech-heavy NASDAQ composite fell around 0.1% and 0.15%, respectively, while the Dow Jones Industrial Average dipped 0.2%. So, in an otherwise light week on economic data, meaning there's no reports like the CPI report or anything being reported this week, investors received the latest figures on retail sales on Tuesday, showing strong consumer spending despite sticky inflation and wobbly labor market. So that means if people are spending money, if rate cuts take place, they're going to spend even more money. So retail sales in August, but that's just my opinion. Anyway, retail sales in August rose 0.6% from the prior month, more than the 0.2% expected. It's not bad, but not good. So in other news, the Senate narrowly confirmed Stephen Miron, President Trump's Fed pick, in a 48-47 vote on Monday evening, a day before the central bank policy meeting kicks off Tuesday. That was smart. So the move has put Miron in place just in time to cast a crucial vote on the direction of interest rates. So I'm expecting an interest rate cut after this Fed meeting. Right? They're meeting today and I believe tomorrow. We'll see what happens. So though Miron had said he would act independently, his intention to take a leave of absence but not resign from his current role as White House advisor has raised questions about the future of Fed independence, especially as Trump pursues firing Fed Governor Lisa Cook. So how can he be a White House advisor and also be a part of the Federal Reserve Committee? Interesting. And they're supposed to remain separate. Okay. So on Monday, the S&P 500 NASDAQ climbed to new highs. U.S.-China trade talks and anticipation Fed officials will announce a rate cut at its next meeting. Oh, I scrolled down too far. I'm sorry. Oh, yeah. Oh, you know what? That was pretty much it for the news. Was it? No. Yeah. Yeah, that's it. Oh, on Tesla rose. Tesla's still rising. Rose 2% on Tuesday after wiping out its year-to-date losses on Monday following CEO Elon Musk purchased shares in the EV maker for the first time since 2020. You remember? Well, if you don't remember, I remember when Tesla fell from where it's currently at to like $200 something a share. I want to say that happened around April timeframe, and now it's over $420 per share. I almost sold my stock in Tesla, but I did not. I'm so happy that I kept it. Um, Also, it says here, Oracle added to Monday's gain as CBS News reported that the company was among a consortium of firms included in a U.S.-China TikTok deal. So Trump and Chinese President Xi Jinping are expected to finalize the deal and discuss trade on Friday. But the main event of the week lands Wednesday when the Fed will announce its decision on rates. Markets are confident policymakers will cut rates due to slowdown in the labor market despite persistently sticky price increases. So traders currently see a 96% chance of a 25 basis point cut and a 4% chance of a jumbo reduction. So we will see what happens, when this rate cut takes place. Even though prices are has increased on goods and services, because of these interest rates, I guarantee you people are going to spend money without thinking about it. All they see are lower interest rates, and they're not going to really pay attention to the increase of that thing that they're now financing. But, I mean, if you have the money to buy it, buy it. If you're budgeting for it, buy it. If you have the cash to pay for it outright, buy it. So let's see what happened in the market today. Again, Tesla gained today $10.76, closing at $421.02. And let me see, was it back in April? Tesla was down to the lowest it got was $222. No, $214 back in April. Yeah, $214. And it's been slowly but surely going back up. Yeah. Because the highest it had gotten was about $428. And then it dropped in April to $200. So if you were investing, you should have bought some more shares. Or if you were investing in the S&P 500, because Tesla is a part of the S&P 500, and you bought more shares of the S&P 500, you're making money. You're making money because of the shares increase in price. All right, so let's see what else happened. Meta gained $15.94. Damn. Meta is now up to $780.64. I remember when COVID happened, I remember seeing Meta at $145 at one point in time. And now it's up to $780 a share. Wow. FTEC, my information technology ETF, lost 50 cents today, closing out at $215.59. Why does this look so strange? No, that is not right. No, FTEC lost 71 cents today. I'm sorry. Closing out at $215.38. Yeah, what was I looking at? Let me double check Meta again. No, Meta gained $14. I should have hit refresh. I apologize. Meta gained $14.30 today, closing out at $779. Not $780, $779. So I apologize. Palantir. What did Palantir do today? Palantir lost 95 cents today, closing out at $170.26. Broadcom lost $4.09 today, closing out at $360. Nvidia, what happened with Nvidia? Nvidia lost $2.91 today, closing out at $174.84. My S&P 500 ETF actually lost 10 cents today, closing out at $77.65. Yeah. What is this thing at year to date? I remember when the S&P 500 was like so low earlier this year, and it has picked up some steam, which is a great thing, and it's now at a year-to-date gain of 12.63%. So had you been investing in the S&P 500 all year long, you would have made 12.63% on your investments for the year, right? You're not going to make that on your high yield savings account at the bank, nor will you make it on your checking or savings account at the bank. Also, my information technology ETF, FTEC, it has brought back gains of 15.33%, which is great. We're not done with the year yet. It could go down, it could go up. That's just the way of the stock market. But on average, not the FTEC, but the S&P 500 for the last 100 years has brought back gains on average of 10%. Now, there were years where it brought back 20%, 22%. But on average, for the average 100 years of the highs and lows, 10%. And I would take that. I would take that for sure. Sure. NVIDIA, year to date, has brought back 30.2%, which is great. Great. Broadcom has brought back 55.28% year to date return on its stock price. Palantir, year to date, has brought back 125.12%. Yes, sir. Yes, sir. Tesla, they took a hit earlier this year, and so far it's made back up everything that was lost. But so far, year to date, it has brought back 4.4%. I'll take that. I will take that. So, I'm not investing in a whole lot, but those are the things that my money are going into. Very diverse. And yeah, the returns are slow. Again, I trimmed down my portfolio earlier this year, or was it late last year, because I had way too many investments. And when you only have a certain amount of money to invest, you can't buying 1 and 2 shares of a stock. I mean, although that's great, if that's all you can afford to do, that's great. But if you have a little bit of money, like say a few $1,000s to invest, you want to make the most out of that few thousand. You don't want to be buying, if you only have $1,000 a month to invest, it may not be wise to buy Tesla stock. You only be able to buy 2, right? So investing into something like SPLG, which is the S&P 500, which only costs $77 and 25 cents, I think, currently, of $77.65, and it has brought back 12% return. You could have been investing that $1,000 into the S&P 500 and buying more shares at the cost of $77, buy 1 share of Tesla, which is only one company, for $400 currently, right? So you want to make the most and get the most out of your investments by being able to buy more shares, because the ability to buy more shares and then over years of compounding interest and the buying of more shares and the reinvestment of the fund back into that fund will make you more money. Even when you have shares like SPLG, again, which is only $77, right? And it goes up 65 cents. But because I have hundreds and thousands of shares, just because when it goes up 50 cents, I may make $2,000 that day just on that 50-cent gain, because I own thousands of shares, because I have been buying that S&P 500 ETF, SPLG, over the years. And when I first started buying it, maybe when I started buying it was only $40, and it is now up to $77. And I'm buying shares every month, because 50% of my investment goes into my S&P 500, 30% goes into my information technology ETF, and then the remaining, is that 20%? The remaining 20% goes into my individual stocks like Tesla, like Palantir, Broadcom, Nvidia. No, actually, I'm not buying any more Nvidia shares. At least I'm trying not to. Oh, and I have IVR. It's a real estate. Almost forgot about that. But I just bought that not long ago. IVR is a mortgage dividend portfolio, and it's currently down 6.52% for the year. But that dividend is 18.01%. So the stock price for IVR, I'm not telling you to do this, do your own research, is currently $7.53, right? And it pays a dividend of 18.01%. So every 3 months, based on the number of shares that you own, let's say, do I have a calculator on this thing? Yeah, here it is. Let's say I have 2,000 shares and it's coming up on the dividend payment. So at 18.01%, why am I? So that 2,000 shares times 18, oh, go back, 01, that's $360 every 3 months that I will make from owning, say, 2,000 shares, right? And so what I have in my portfolio, in my investment account, is to reinvest that money back into IVR. So then, say IVR is still at $7.85, right? So that 360 divided by $7, and let's say it's at 65 cents. That is going to buy me another 47 shares. So I just have that continuing to do that. And if you have that over the years, think about in 15, 20 years, what that may look like. It could possibly look like every 3 months I'm being paid $5,000. If it's still holding at this, or the percentage of payments of the dividend could go up, who knows? But that's why I must track this, right, on my own, because it could go down. It could go bankrupt, you know, stock could go to zero. Anywho, let's just say it's now paying me $5,000 a quarter every 3 months, and there's 4 quarters in a year, so that's $20,000 a year. There are people out there that live off of their dividends. There's some people that may invest, say, $500,000 into some dividend portfolio, and let's say that $500,000, right? That's for kicks and giggles, and you currently, say you invest $500,000 into IVR, and it's currently at $7.53. That will give you 66,401 shares, right? 66,401 shares. Let's just cap it out at that. And let's say it's still at 18%. So times 0.18. That is $11,952.18. Say times 4, that's $47,808, right? Some people may live off of that, you know, divided by, say, 12 months. That's $3,984. Because here's the thing, you can set up your portfolio to have the money reinvested to you, or you could have the money transferred to your bank account. And there's a lot of people that are retired out there that have been investing into things like this that pays dividends, like Coca-Cola, Johnson & Johnson, so on and so forth, or this IVR portfolio that I just found a few months ago. And, you know, they may be receiving more money than this. They could be receiving, you know, because they've been investing in it since they were 20, and then they retired at 65, so they've been buying this stuff for over 40 years. They could have, who knows, $1 million in there, and they're being paid $20,000 to $30,000 every 3 months. That is possible, people. It is possible. But again, going off my scenario, say there was $500,000 invested. You have 60, I think it was 66,000 shares times the 18% equals the $11,592 times 4 quarters. That's $47,808 divided by 12. If you want to divide it by 12, that's $3,900 a month that you could be receiving off of that, plus your Social Security, plus your 401k if you have one, plus any other retirement income that you may have, and other investments from your portfolio, real estate. Yeah, so boom, that's it. So I'm gonna stop talking because I've been talking way too long and I need to go to work. All right, so you guys like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. As always, get out of debt. Debt is bad. You should be allergic to debt. Get out of it. Let it go. Let it go. Make smarter decisions with your money. Stop digging a hole and then feeling like you can't get out of it. So the same way that you got into it is how you need to figure out how to get out of it. Because you got into it, you can get out of it. It may take a while. It may hurt a few brain cells. You may cry a little bit, but it can be done because you reap in life what you sow. So if you don't like what you've sown so far, then start planting new seeds and getting out of debt. And in order to get out of a debt, and how to plant that new seed is with a budget, with a plan, where you can start telling your money where to go so you can stop trying to figure it out. Like, where did your money go? Stop trying to figure out. With that budget, you're telling your money where to go. I don't have to worry about where my money is going because I still maintain a budget. I still pay myself. Even though I am debt free, I pay myself. And I use that money to make my purchases. Now, I bought a smoothie and I didn't have the cash on me. But either way, I pay myself so I can utilize the money that I'm paying myself throughout the week and for the month to buy things that I would like to buy, to avoid using my debit card or credit card, or to keep me from going to the bank and withdrawing money. I just have my money that I say, okay, this is my money for the month. I also use that money if I have anything left over when I go on vacation. That's the money that I spend first, or the money that I give away first before I even think about going to an ATM machine. And more often than not, I never have to go to the bank. No, I lied. If I go home, I always go to the bank. But when I go on vacation, I never really go to the bank. Never. Yeah. All right, so I'm gonna end this video. Yeah, I said that. All right, you guys take care. Peace.